Okay folks, so in this video, I want to go ahead and provide some tips and strategies that I believe you guys can take to help you guys become a better trader. Now, some of these are just going to be tips, things that I recommend you should do, but also some of these are going to be actual trading strategies. With that being said, hopefully you guys find value in this video, and if you do so, please make sure to hit that like button as it does tremendously help with the video. And with that being said, let's go ahead and get started. So one of the first things I want to mention to you guys is to go ahead and get started to getting in the habit of looking into economic data. Right now, I know some people may trade stocks based off technical analysis or even fundamental analysis, but I think regardless what trading strategy you're doing, you should always, absolutely always be paying attention to what's going on in the economy. Now, the reason I believe this is such a vital tool when it comes to trading in the stock market is simply because when you're looking at economic data, it kind of provides a little bit of a pulse of what's going on in the market. And back when I first started in 2016 trading and also investing in the stock market, I did not pay attention to economic data. I didn't know what was going on. I was simply just looking at the charts. Now, looking at the charts is fine. Of course, you could use your technical analysis, identify trends and patterns. However, you have to understand the reason why prices are going up and down, right? And so I think that's something that a lot of traders, especially, me, for example, do in the beginning, is that they ignore, these economic events. And one easy way to kind of be up to date to, everything that's going on in the market is simply by just looking at a calendar. You guys could go to briefing.com. I'll put the link in the description of this video. You don't have to pay for the website, use a free website, and just look at what information is coming out. There's always information every single week, every single month that could really help you identify what are the trends that are going on. For example, back in 2017, the market was going down around in February or March, and at the time I just did not understand why it was going down, right? I was just noticing that the market was going down. I thought it was a bear market, everything was forever going to go down, but the economy was still extremely strong back in that period. Of course, now may be a different story, but of course, the market's very cyclical. Right now may not be strong, but eventually we may have another bullish market in the next coming years. But again, you need to understand, what's going on with the GDP, what's going on with the economy, what is the consumer sentiment, right? Because that will really help you get a little bit of an understanding of what direction the market is looking to go. Unfortunately, this is something that you kind of pick up or learn later on when it comes to trading down the years, because even when I went to college, when we learned about, how to evaluate a stock or, how to look into a company, all we were told was, looking at the books, the numbers, the fundamentals. And then, when I started reading and learning on my own about doing technical analysis and learning price action, again, you're just looking at the charts and looking at the number. So it was really through experience that made me realize, well, there are these external factors that really influence a lot of what's going on with businesses and companies and, what's going on in the overall stock market. And it's because of this economic data. So you have to really be, up to date, and also be up to date with current events, because, something can happen the next day in a separate, different part of the world that can completely impact, maybe the supply chain of what's going on in America, or just, being able to identify, what's going on will help you become a better trader. Trust me, this is something I wish I learned in the past, but, it's just something that comes with experience. Now, something else that I highly recommend when it comes to becoming a better trader is to simply just pick up a few trading courses. Now, I know there's a lot of people that talk poop on courses, and to some degree, I could 100% understand, especially if there's a course out there from someone who's charging thousands of dollars for information that provides little to no value, then of course, that is something you want to stay away from, right? But, of course, there are some courses out there that are actually, pretty decent, where they do provide some value, and they're not really that expensive. They're actually pretty inexpensive for the amount of, value and time that they save you. And for me personally, back in 2016, I thought, well, why would I spend a single penny on a course when I could just use that money and contribute it to my trading? I thought, well, okay, I already had some college courses that, taught me about, identifying value in stocks and finding discrepancies in price. And I thought, well, there's also YouTube, there's Google. So if there's anything I don't know, I could simply look it up. However, it's not as easy as it sounds, because there's something that a lot of people don't consider, and that is the fact that you don't know what you don't know, right? And so a lot of times what these courses may provide is just the effect of actually just saving time and expediting the learning curve, because maybe there was something you didn't know you should be looking up, like for example, looking at economic data, right? However, there may be a course out there that may say, hey, you want to look into this, and then because of that, it helps you just kind of learn or get through the learning curve for trading a lot more quicker, a lot more efficiently. Again, it's not something you absolutely have to do. Have I ever taken a course on trading? No, but did it take me a longer time to get better at trading? Absolutely. But at the end of the day, everyone has a separate different time frame, a separate schedule, different learning curves and different learning paces. So at the end of the day, it's really up to you. Now, something else I think can really help you guys become better traders is to really just oversimplify, your trading strategies and only look at a few stocks to trade for the week or for the month. And in fact, I think it's better to repetitively trade the same stock over and over and over again. And I think that, one of the benefits is that you kind of understand the, price sensitivity that a stock will have. For example, I understand that Tesla stock is a stock that can range, on a regular day from 3 to 6% or even 12% on an extremely volatile day, right? And that's simply because I know that, the patterns of Tesla, I've traded it over and over and over again. And again, it doesn't have to be Tesla. It could be a stock that you like to trade or something that you feel comfortable trading versus, trading all over the place. I know when I first started, I was looking at penny stocks and mid-cap stocks and, large cap stocks. And, that's something that is going to take time to be able to trade multiple different stocks every single day, finding new stocks to trade because each stock trades differently. And if you're someone that doesn't have a lot of experience, you may not understand how things may work for different stocks. For example, a penny stock, especially something that's over the counter that some people like trading, may have like very little liquidity. Right? And so you have to understand that when you put a lot of money into stocks like that, it may be difficult to get your price orders, your fill orders in and out. It may be difficult to exit out or enter in versus something that's highly liquid like the S&P 500 ETF index SPY. That's something where you could get in and out easily, right? Or something like, Apple stock or Nvidia, right? At the end of the day, being able to just trade something over and over again, you really try to, you actually start to get like a better understanding of what is most likely going to happen and, what is something that is just out of the ordinary. Now, something else I recommend you guys do, especially if you guys want to become better traders, is to simply continue reading and continue learning as much as you can. Back in 2016, I thought I knew it all, right? And the only thing I absolutely know now is that I will never know enough because there's always so much more to know, right? And there's a quote by Mark Twain that says, history doesn't repeat itself, but it often rhymes, right? And so that just means that, oftentimes, even if you do learn from the past, there's always something else to learn because although there may be patterns that are similar, the market is constantly adapting and is constantly evolving. I mean, think about, back in like the early 1900s when people were actually, at the stock market exchange floor yelling to, get their orders filled versus now when, we have a lot of, just updates in technology. People trade on their phones. Now, I do have another video where I talk about a few books that I believe are really good for trading and I explain why I think these books are really good for trading. So if you guys want to check out that video, I'll definitely leave it in the comment section below so you guys could, feel free to see what books I recommend. But with that being said, let's go ahead and talk about something else. And that is online forums. Now, when I first started, I was on Wall Street Bets Reddit forums. I was all over StockTwits and any forum that you can get. And, although there is, power to being in a community and being able to talk with other traders, I do think that is something that's beneficial. But it has to be a community that is really strong and robust with knowledge, right? So, a lot of times when you go to these big online forums like StockTwits or Wall Street Bets Reddit, you don't know who you're really talking to on the other side and, what information or what knowledge have they learned, what, trading experience do they have. And so you may be, talking to someone who may sound like they know what they're talking about, but they have absolutely no clue about how to, successfully trade. And so sometimes, when I was first starting, I would listen to people that looked like they knew what they were talking about. And because of that, I broke my own, trading rules, just trying to, follow whatever someone else's advice is. And at the end of the day, you don't want to trade or, invest in anything that you don't see value in just because someone else said so. You want to make sure that you understand why you're entering into a trade. And I think that when you have, when you enter in these forums, there's just a lot of noise that can really just corrupt, how you are or what you do when it comes to trading. And at the end of the day, it's, okay to have forums or be in a group community, but make sure that it's a community that, again, is strong and robust with knowledge. For example, if you guys are not part of the Push Your Profit program, this community is a community where, everyone goes through the same structured material from the Push and Profit course that I provide. And with that being said, a lot of the people are a lot more experienced when it comes to trading versus, people who just pick up, Robinhood and then go onto a forum like Wall Street Bets the next day. Now, a strategy that I think that could also help improve your trading is simply following the larger trend. I know a lot of times we kind of trade the intradays, especially if you're a day trader. You may trade like based on the 5-minute chart, based on like maybe a 15-minute chart, or some people even trade on a 1-minute chart, and that's completely fine. But I think at the end of the day, you should always kind of get a broader scope and look out of what's going on, because if the market is trending downwards for the last 6 months, you want to make sure that you're going with the direction that the market is going. Because if you automatically just assume that today is going to be a bullish day, things are going to go up, but the larger trend is suggesting that most likely it may go down, then you want to really follow that trend. Same when it goes up, vice versa. If the market is just continuously very bullish, it does not mean that there's not going to be any red days. Of course there are going to be days that go down, but overall the larger trend is going up. And so you want to make sure that even if you're day trading and you're looking at the intraday, you want to look at what the larger trend is, because that can most likely tell you which direction the stock is going to go for the time being. Again, it's not 100% perfect, and of course we could be in a bullish market and there's going to be some companies that still go down in a bullish market, but you have to understand the larger trend, because that may help identify the path that the stock is going. Now, there's a saying in the stock market that goes somewhat like this, and it goes like, the trend is your friend until the very end, when it bends. Now, it's a funny little saying, but I think it's a really helpful saying that you can use to help remind yourself on why it is important to pay attention to the overall trend. Now, think back simply to, in 2020 all the way up to 2021, where, after the pandemic, when we had, that short, flash crash that lasted about almost 1.5 months, the market rallied tremendously. I mean, there was a lot of stimulus being pumped in the market. People were putting all their, money into the market. We also had the Feds contributing to that, but we're not going to, talk about that in this video. But the trend was high up, and there was a lot of times where I kept shorting the market thinking, well, no, it absolutely has to come down, this is too high. But at the end of the day, your job is not to predict what's happening, but really just trade what's going on. And so if the trend is going up, then your best bet is to ride the trend up. And like I said, even if you're looking at a smaller intraday time frame, scale back up, look at what the overall trend is doing. And so if the overall trend is going upwards, most likely the stock market is going to continue going upwards. Again, there are going to be red days when the stocks go down. I'm not denying that, but the overall trend is telling you a different story. And so, one of the things I had to really learn is being able to identify that larger trend and then waiting for confirmation to understand when that trend is broken and when should I start trading or changing my trading strategy. With that being said, I just wanted to provide you guys a quick, simple video on some tips and strategies I think you guys could really benefit from. Hopefully you guys found value in this video. If you did, I'm going to need you guys to watch this next video over here, because this video is a really great video, especially if you want to understand alternative data, which is something hedge funds use. With that being said, guys, I'll see you guys on the next video. Take care.